Still the question, are hikes back on the table? Bank of America is thinking exactly this. We still think that the 6-month inflation trend, which we're looking at, is still negative and will remain negative, which is a positive sign that inflation won't be coming back in a meaningful sense anytime soon. A lot of people are then saying, nice, that's great. We're seeing inflation not coming back. We will have more rate cuts. That's just great for risk assets, right? But the thing is, I think one thing that we will be seeing probably in a few weeks or a few months' time is that another topic that a lot of market participants have been losing their sleep over is the most likely form this could take, such a strategic Bitcoin reserve, which I think I'm really confident about that this will happen, is really Michael Saylor did, as I said, 70% in just 3 months. And why did he go so fast? Obviously, just because he wants to buy as many Bitcoin as possible, that's true. But maybe he wants to front run something. Last but not least, I really want to talk about the Bitcoin stablecoin flywheel effect. So quite a mouthful, but what does it mean? Some people are speculating that this could be Bitcoin's biggest catalyst. Hello everyone, welcome back to Less Noise, More Signal. Today I'm not interviewing any guest, but I'm talking to you to share with you a few things that should be on your mind as we move into 2025. But first off, I obviously want to congratulate everyone on being part of this journey. I also want to say thank you to everyone for continuously tuning in, commenting. It's just great. We had an amazing run up with the podcast. We've been live for 4 months. 4 months approximately, and we've already grown to 1,600 subscribers, and it's just amazing to see how you guys are supporting this channel. And we hope we will be able to keep on delivering for you great content, really at the intersection of Bitcoin, digital assets, stable coins, and macro markets. Well, so today, obviously, as I said, I want to talk to you myself about a few undercurrents that I see that you should have on your mind moving into 2025. Now, the last few days, and obviously the first few days of 2025 haven't been that exciting. It's rather been dull, and the markets have gone down, Bitcoin as well as traditional markets. So why is this the case? It's predominantly the case because of a strong job report that we got. And because of this strong job report that we got, it seems like the economy is doing a lot better than people have been expected. So it's sort of like good news is bad news right now. And because of this, many people are asking themselves, is the cutting cycle, the global cutting cycle, is it already coming to an abrupt end at this point after it was only started back in 2024, towards the end of 2024, so to say. In September, I think it was the US Central Bank when they really lowered interest rates as well. So this is really the question. Well, how do we have to kind of judge now this job report that we got? I do think it was probably something because of Trump that won. It's not something that will last and is rather short-term in nature, because I think that with Trump becoming president, there was a lot of political uncertainty that kind of went away. It abated. And this led to companies that actually waited for this election outcome to then ramp up hiring. And that's why I think we've seen these numbers coming in. Still the question, are hikes back on the table? Bank of America is thinking exactly this. We do think this is rather overblown at this point in time. We see no reason why hikes should be back on the table just right now. They obviously would be back on the table and would be something that central banks will have to do if inflation is coming back in any meaningful way. And so this is really the case. These inflation concerns, they have risen because people think the economy is doing better as expected, and that's why it could be the case that inflation is picking up. This is also because we've seen that inflation, the acceleration of inflation recently has sort of stalled or has just began to slow down. And it was the case that the 3 months trend in inflation was marginally positive, and that's really why people in markets have become sort of afraid, but we still think that the 6 month inflation trend, which we're looking at, is still negative and will remain negative, which is a positive sign that inflation won't be coming back in a meaningful sense anytime soon. So, that's also then the fact, because why do we think so? As a matter of fact, I think that these higher interest rates, as they are persisting right now, also with these higher yields that we're seeing across markets, they should actually wear on the economy as well as financial markets, slowing growth down at the margin. And that's why we currently believe that the market is sort of mispricing and the number of rate cuts that we will see in 2025, because we do believe that growth is slowing down, and that at some point these rate cuts as envisioned in 2024 will come to fruition. So a lot of people are then saying, nice, that's great. We're seeing inflation not coming back. We will have more rate cuts. That's just great for risk assets, right? But the thing is, I think one thing that we will be seeing probably in a few weeks or a few months' time is that because these higher interest rates are weighing on the economy and are slowing growth down, we could actually see a reversal to the other pole, so to say, where people are then like, ooh, the economy is deteriorating so fast that this could lead to another growth scare. And obviously, this is really this juxtaposition between if there's too much inflation, it's bad for risk assets, because hikes could be on the horizon. If on the other end, the economy is slowing that much and is doing so badly, then obviously this would also be bad for risk assets, at least in the short term. And that, I think, will happen as we go forward. Obviously, we don't think that there is a recession around the corner, and that's why I think this will just be short-lived. But that is something you will certainly have to have on your mind as we move forward in the next few weeks. Another topic that a lot of market participants have been losing their sleep over is the strong dollar that we're currently seeing in the market. I mean, for the past few weeks, we've heard so many top calls, like people calling the dollar to have topped out, and it just never has so far, and it's gone higher and higher. And so the question really is it really getting stronger at this point? And what will this do to global markets? Because we know once the dollar is really going on a killing spree as it has, and it's moving ever higher, this is really a sort of global margin call on US denominated debt issued by non-US entities, and as they see the dollar getting stronger, it weighs on their portfolio because their debt, so to say, is becoming more expensive, which means they will have to sell more assets to cover for this. And this is also rather negative than for global markets, and so we do have this dollar liquidity risk, and the higher the dollar is going, that's for sure. Can it go that much higher? Probably not. I mean, there is a lot of speculation, and this is certainly consensus, that Trump, once he is inaugurated in a few days, that he will make sure that the dollar will come down again. He's really said on multiple occasions, as well as his allies and Scott Bessent as well, the new U.S. Treasury Secretary that we will speak about later as well. They said on multiple occasions that they want the dollar to come lower and to be lower, and they will probably also take the measures. But it's still just interesting to see. And obviously, when we look to Trump's last presidency, when he became president, this was the exact same thing that happened. Up to his inauguration, we saw the dollar rise, and once he was actually becoming president, he was renegotiating, and see that the dollar then also collapsed again. some people are speculating that Trump is using a stronger dollar as a sort of negotiation tool. It's all about negotiation. And so this is certainly something that there could be some truth to this. But then again, we know that Trump is obviously always big in terms of negotiation and his tactics. But then does he walk the talk? Typically, he delivers much less than he actually kind of lays out in theory. So it will be interesting to see this. I mean, a stronger dollar, what could be making a dollar even stronger, and that's also why some people might be scared, is really if you bring down the deficit significantly, and obviously this is something that Elon Musk and Vivek are planning to do, with DOGE. You have probably heard this, the Department of Government Efficiency, and there the people are speculating, could this have like these unintended consequences of like, if you diminish government spending, obviously for one, you make the dollar stronger, which then again would be bad for global markets. But then you would also sort of have less government spending, and at the margin, this could be negative for the stimulative effect this government spending has on the economy and financial market at large. Because as we know, we currently, and we talked to Lynn Alden about this on our podcast as well, we are sort of in this fiscal dominance environment, and there it's really also government debt and government deficits that are sort of driving the markets. And if you cut down the spending as well as just the deficit, then obviously this could be sort of deflationary. And that's why a lot of people are probably scared because of this as well. We are rather confident that Musk and Vivek, as much as we love them and as much as we think they're pretty capable, they won't be successful in really bringing down the US debt significantly. There's a couple of reasons for this. Obviously, a lot of government spending is mandatory, and just because of demographics and because of ever rising health costs and stuff, government will have to provide for this, So there's only about, I think, 18% of like non-compulsory spending, and that's not that much that can be cut. So that's one reason. The other reason is really, I think, go read your Mises, Ludwig von Mises. He's written a great like seminal book on that topic. It's called Bureaucracy, where he really lays out that it's really hard and it's rather impossible to run a government agency similar to a private company, and it's just not possible to optimize it, and that way you won't be able to make it efficient, even if you try ever harder, and that's certainly something that maybe Musk and Vivek are not considering here, but I think Mises is spot on, and that's why we think it won't really be that successful after all. So we're not really worried about this DOGE being too deflationary and then also putting more upward pressure on the US dollar. Then another topic that we have to turn to is obviously the liquidity situation, like the overall liquidity situation, because we're still of the belief that, as we talked to Michael Howell, for example, that liquidity is what is driving markets. And so the question really is, how is liquidity going to fare in 2025? And obviously, the debt ceiling has led to a lot of discussion. What is the debt ceiling? Basically, quickly explained, it's the fact that the U.S. government cannot issue any more debt beyond a certain threshold, which is the debt ceiling. And this has been reinstated just recently in January, on January 2nd, so to say. And just to avoid the potential shutdown of U.S. government, a temporary funding bill has been passed by Congress, amounting to around 1.5 trillion in extra spending. And this still happened in 2024, just to have some more leeway in terms of government spending and in terms of like operating U.S. government. But after all, these are all makeshift measures. We would believe when we look further ahead, the so-called X date, the point at which the US government could run out of funds, is projected to be or to occur around August 2025. So until then, the debt ceiling will have to be resolved. Otherwise, there will be a shutdown in government agencies. But with the debt ceiling, as we said, reinstated since January 2nd, and the government not being able to issue more debt beyond this extra spending package that has been approved, we can assume that there will probably going forward be a negative bill issuance due to the fact that these bills will be retired and a lot of that debt will be retired, which will then sort of mean no new debt can come onto the market, no new debt can be issued, and that's why we will have negative bill issuance. And this means this sort of stealth QE effect that we've been seeing, and we talked about this as well with Michael Howell, where he said, like, because the U.S. Treasury has been issuing so much short-term bills, that this sort of acted as a sort of not QE or a stealth QE mechanism will stop for the time being, which then also means that QT will have its full effect and fully impact financial markets. So that is rather bleak for the liquidity situation, so to speak. Still, we think obviously if things are going to play out as we say here, then we will probably and if we not see any earlier increase in the debt ceiling, we think that the TGA, the Treasury General account, so sort of the bank account of the U.S. government, will likely be drained, with some intermittent fluctuations until the summer of 2025. This is like the only measure that can be taken, or one of the few measures that can be taken. And currently there is about 700 billion left in the tank, so to speak, that can be flushed out into the market. And such a TGA spend down is literally like liquidity injection into market, because it's money that has already been borrowed from savers by the US government and is re-injected into financial markets, into the private sector. So we think that this negative bill issuance will result in a TGA spend down, and funds will be handed over to private owners, which is sort of positive for liquidity. Then the question is, where are they going to put this liquidity? Are they going to buy Bitcoin with it? Are they going to buy other sorts of assets with it? We think that the likeliest scenario is that most of this liquidity will actually be moving into the RRP, so the reverse repo facility. And this then would sort of be liquidity neutral. And obviously this RRP can also be drained, and some people are speculating that this will be drained all the way to zero as well. And then at this point, QT, quantitative tightening, which the Federal Reserve is currently doing, would have to be terminated, and this is also sort of what Wall Street and the experts on Wall Street are expecting, that sometime, maybe already in the first quarter or then in the second quarter of this year, QT will officially have to come to an end, but this is yet to be seen. One other interesting thing we have to talk about is the debt refinancing wall that is going to hit us in 2025. This is also something that was again brought up by Michael Howell when we talked to him, and it really means that a lot of debt will have to be refinanced in 2025, and there will also be a lot of like government debt that will have to be refinanced, and there is the fear, or at least a slight fear in markets, that this could sort of overwhelm, financial markets, that there won't be enough balance sheet capacity to roll this debt, and that would then also lead to sort of disruptions in the bigger economy and then in the market, which would affect the risk assets like Bitcoin. We do think it's probably not that risky, so to say, because like currently 6 trillion out of these 7 trillion in debt by the US government that will have to be refinanced are bills, are short-term US government bills with an interest of 5%. And these bills are expected to be refinanced at lower rate, because currently the federal funds rate is at 4.2 5%, which then means they're paying even less on these new bills that are being issued, which then would lead to cost savings of around maybe 50 billion US dollars, and then, so to say, only 1 trillion of that debt consists of older coupons, currently paying 2.5%, and they would be refinanced at a higher level, that's for sure. And that would mean on that front, the US government would have to pay more. But overall, it looks like that if you make all these adjustments and there will be sort of net less interest rate or interest that the US government will have to pay, or government debt costs, so to say. And obviously, if that is the case, as we kind of laid out here, then this refinancing for the US government at least is not that much of a problem as of now. So yes, as we laid out now in this overview, when we talked about like also the macro situation and also just in terms of growth and inflation and the stronger dollar, what's going to happen, I think there's a lot of mixed signals that could believe that it's not just going to be a one-way to heaven, so to say, with risk assets like Bitcoin. This is obviously what probably most of you guys are interested in, what's happening to Bitcoin in 2025. But still, I mean, there's a lot of positive catalysts as well. I think it's not at all bleak, even though I think there will be ups and downs that we just laid out, because there's just the system is that complex nowadays, and obviously there's really a lot of moving parts that we just tried to kind of talk about, and that's that it also goes to show that whatever happens, it can be ebb and flow, so to say, and that's certainly something that we're expecting for 2025. That being said, we do think there is this sort of Trump put in the market that is really uplifting Bitcoin, and we've been seeing it for the past few weeks or even months, around 90K, for example. We've seen so much demand coming in, probably because a lot of people are expecting that the market is sort of still underestimating the vigor with which Trump and his entire administration will pursue their crypto policies, because I think for them, crypto is still a huge opportunity. I think they know this, and Trump is not going to really probably disappoint on that front, just because he knows these 550 million plus crypto holders in the US, they are now really fond of him, and he really wants to keep them. Republicans want to keep them on their side because there's going to be new elections already, midterms in 2026. So you don't want to disappoint them by now letting them down with by not following through with everything that you said. So my belief is that this is something that we will see, that the Trump administration will really follow through with a lot of their crypto policies. And after all, as we have seen, the crypto world, it's a force to be reckoned with. It's one of the biggest movements right now. It's growing ever bigger. It's growing probably in 3-digit numbers, annualized. And as I said, it's one of the biggest movements. It's bigger than Black Lives Matters, than Mormon, digital nomad, or what have you. It's just amazing. And I think obviously this is something politicians they kind of have seen this, and they're going to act upon this accordingly. Now, zooming in on the actual policies that now can be undertaken by the Trump administration, one thing comes to mind, and it's obviously the strategic Bitcoin reserve, which remains a topic after all, which is quite fascinating. That like a government is seriously talking about this, and it's like the biggest government on earth, with the US. So that's really interesting. Obviously, if you look at polling market, the market is not believing in this, and the probability of this happening is still evaluated to be rather low. But I think a few things have to be shared along these lines. For one, like the Bitcoin Policy Institute, which is a think tank sort of in the US, has already drafted an executive order that can only or can just be signed by the president once he's in office, and so he just has to give his one signature, and this would already be a done deal. And obviously, I think this draft will be brought before him, and so there's no more hassling in drafting something like this that has already been done. So that's certainly interesting, and I think the most likely form this could take, such a strategic Bitcoin reserve, which I think I'm really confident about that this will happen, is really that the US government will keep it as Bitcoin. There's been a lot of speculation in recent days that the US government is selling the Bitcoin, the 200K Bitcoin that they have. I don't think this is the case. And when we look at Arkham and kind of watch the US government wallet, we can still see these Bitcoin are in there. So I don't think that there's any selling going on. And so, once Trump is in office, he can really enact this strategic Bitcoin reserve and make sure that these Bitcoin 200K won't be sold anytime soon. And then obviously, if there is support by Congress, and other government agencies like the Treasury, this SBR, this Strategic Bitcoin Reserve, could actually expand. And I think there is obviously some room for this to expand. There are also at least like some friendly ties already being established, between Senator Cynthia Lummis, the initiator of this infamous Bitcoin bill that wants the U.S. Treasury to buy up to 1 billion Bitcoin over the next 5 years, and Scott Bessent, the forthcoming and upcoming U.S. Treasury Secretary, and who happens to own Bitcoin personally. And I think it's also speculation that he will have to divest now just to avoid conflict of interest. But it shows that he's certainly something. He's one of the most, I would say, successful hedge fund managers, and he's fond of Bitcoin. So it's just interesting that we see all these things coming together. And obviously the extended Trump circle, all the people that Trump has around himself, is really incentivized to push activities that support Bitcoin and the SBR, even if it's not that big in numbers, so to say, just off the bat. It's just a signal that they will be sending, we think. And for example, you have Vivek, who recently launched a Bitcoin bond ETF. And we obviously know of other people like JD Vance, who are also holding Bitcoin on their personal balance sheet. So there's just a lot of incentives that would us or have us assume that this there will be a lot of positivity coming out of the Trump administration for Bitcoin itself. And one other thing, another hint, so to say, which is also very interesting, and obviously it's just speculation, but you guys might have seen it. It is really about MicroStrategy. What if MicroStrategy has already burned through 70% of the largest ATM offering the capital markets have ever seen in just 3 months, instead of the 3 years that it was originally said that it would happen? Michael Saylor did, as I said, 70% in just 3 months. And then why did he go so fast? Obviously, just because he wants to buy as many Bitcoin as possible. That's true. But maybe he wants to front run something. And obviously, we've seen that there has been an image shared around between Michael Saylor and Eric Trump, and this sparked a lot of speculation that Saylor might be in the know. Here's about something that the Trump administration could be pursuing. So we don't know. It's all speculation, but it's just interesting, and it is a sort of signal development that is hard to ignore, we would say. Speaking of Michael Saylor, we obviously also have to turn to MicroStrategy, which we believe in 2025 is still going strong and is still commonly misunderstood. And why is this? We really think that this Bitcoin buying US company will be continuously buying Bitcoin. And why is this? I mean, MicroStrategy recently announced a special meeting for shareholders that they will hold, and it's set for January 21st. Which happens to be one day after Trump's inauguration. So this is just as an aside, But then the meeting itself will focus on key proposals aimed at speeding up the company's 21-21 plan. As we already said, it has already been sped up significantly, but they want to go even faster, streamlining capital raising efforts even more, and really aligning director compensation with Bitcoin-centric vision as well, and yeah, I mean, MicroStrategy's strategy is all about pulling forward years of buying power, just to really front run a lot of the other institutions that might still come along and buy Bitcoin. And one tool that they now also presented was this preferred share issuance. They want to issue preferred shares. What are preferred shares? Just quickly, I mean, these shares, they're different from common stock shares in that they have like a call option embedded as well as dividends, and that this is like a sort of a unique blend of something that has like growth potential through the embedded call option that is present, as well as also presents or gives like income stability via these dividends, And so I think it will be interesting to see how these preferred shares will be received by the overall market. But we think it's yet another tool for Michael Saylor and MicroStrategy to just tap into these vast pockets of TradFi markets, and it's just be something that gives him more optionality in selling stuff to buy Bitcoin, And so that's why we believe that MicroStrategy will continuously be buying Bitcoin all throughout 2025. The fact that MicroStrategy has at the end of 2024 been added to the Nasdaq index is just also further fuel on this momentum and around these Bitcoin purchases. And then another thing that needs to be on your radar is really the new FASB rules that will or are implemented now. These are these new accounting rules around companies handling Bitcoin on their balance sheet, and they are crucial because these new rules will allow MicroStrategy to classify Bitcoin as a financial asset and value it mark to market, which then also means that this will have a positive impact on the company's earnings. And that is really, really important. Although these returned earnings don't really hit the income statement, so all the wins and gains that MicroStrategy has had with Bitcoin in 2024, they won't kind of feed through into the income statement of 2025. It is still the case that new Bitcoin that is being added to MicroStrategy's balance sheet in 2025 and actually does appreciate would create positive earnings, for the company on its income statement, and that then could again lead to sort of like a lower PE ratio for MSTR for MicroStrategy's stock. This is because like earnings could potentially be growing faster or rising faster than the stock price. And then that again would mean that if the stock price would not initially kind of adjust to reflect these new earnings, it would be the PE ratio would like temporarily at least signal that the MSTR stock is highly undervalued, which would then probably have market participants buy into MSTR even more, especially if you then just compare it to maybe Nasdaq's like average PE, which is around 36. And so this is just something that we feel like could accelerate MicroStrategy's strategy even more. And then obviously at some point also help it to be included in the S&P 500, the biggest, so to say, stock index in the US. And that would just, again, further and promote the entire strategy and have a positive effect on Bitcoin itself as well as MSTR. So that's just something you have to be aware of as well. Last but not least, I really want to talk about the Bitcoin stablecoin flywheel effect. So quite a mouthful, but what does it mean? I mean, sort of some people are speculating that this could be Bitcoin's biggest catalyst, and that it would actually be stablecoin growth. That could be Bitcoin's biggest catalyst. And why is this so? So before we dive into this Bitcoin stablecoin flywheel, we have to keep on thinking about stablecoins and what's happening there, First off, I think in terms of US politics and crypto, as we've seen, it's going to turn more favorable. And the biggest beneficiary of this, we believe, will be stablecoins. And there's already a bill also, again, that's presented to US Congress. It's called the Gillibrand Payment Stablecoin Act. And we believe that this bill has one of the highest chances of all crypto things to be approved by Congress and being passed into law. It would be really positive for stablecoin. It would probably also then kind of further stablecoin growth. And that's where we turn back or hark back to this Bitcoin stablecoin flywheel that we've been discussing. Because how does this flywheel effect sort of work? And we just want to lay it out here a high level style. We also have to say that we're still thinking about this. We're still pondering on this ourselves. We're not sure about the entire causality of all these theoretical connections, or if there is just more like a sort of correlation that you can see. But we're also happy to just lay it out here and get feedback from you guys. If you have any feedback, if you know people who have thought about this as well, we would love to hear that, because we're making up our own minds here as well as we speak. But how does it work, the Bitcoin flywheel, or the Bitcoin stablecoin flywheel effect? So the thing is, as stablecoin market expands, stablecoin issuers will have to buy and soak up more US treasuries, to kind of back their stables. And this demand will obviously be met by the US Treasury by issuing more debt instruments, mostly in the form of short-term bills. And again, as is widely considered the case, this is sort of issuing short-term bills is indirectly considered to be money printing, because of various things that we can't go into now. But this would obviously benefit Bitcoin, because like if there's more like sort of money printing going on, more monetary inflation, quote unquote, Bitcoin would profit from this. That would mean Bitcoin's price could potentially rise. And a higher Bitcoin price then again will have a positive effect on the stablecoin market, as we've seen, because like if there's more Bitcoin trading going on, then a little more stablecoin are also needed for traders to kind of hedge and also go long or short Bitcoin. And that is sort of the flywheel effect that we just kind of high level here laid out, that both of these things are sort of reinforcing each other. And if we believe that the stablecoin market can go to 1 trillion over the next few months or years, given the positive regulatory outlook in the US, then obviously, we can also believe that this could boost Bitcoin, and it could be vice versa, affecting each other. And so it's just very interesting to see what's going on here. It's certainly an effect that probably most people don't have on their radar, especially because, as we said already, we have to think about this in more detail of how the mechanics of it all actually work. Great. So thanks a lot. I hope these were all these undercurrents for 2025 that we wanted to share with you. Leave us a thumbs up, leave us your comments, let us know, share the video around, and we would be happy to talk to you about anything. And going forward, we will share many more episodes with you where we will also explore these exact topics that we've now been discussing here, and lots more beyond all of this. And in the meantime, we just want to say thank you for everything. Stay tuned and have a great one. Bye, guys.